Right guys, welcome to the channel. So this video is spurred from this question I got from a trader who had been trading a little while and he can't seem to grasp his consistency, he can't stay consistent. So if you are thinking about getting into trading or you're already trading and you don't know this information, you are putting yourself at a massive disadvantage. So I'm also going to share with you some numbers that not many people share. So let's get into it. So one of the major causes of people not being consistent is lack of discipline. And one of the main reasons that people lack discipline is because they don't think in terms of probabilities. They're too caught up in each individual trade, each individual week, each individual month, and they get too caught up in short-term results and they don't look far enough into long-term results. So an analogy that I like to use is a coin flip, right? And let's pretend the coin is our trading system. Okay, so we've done our back testing. What back testing is where you go through in past data and you just prove the system that you're trading. Okay, so you prove that it works, right? And through our back testing, we have found that we have got a 50-50% chance of being right. So we've got a 50% win rate. Okay, the same as the coin. And in our trading system, we always trade with a 2-to-1. Okay, so when we lose 1, and then when we win 2, right? So a 2-to-1, right? 2R. For example, we're in this position, we've got our opportunity, right? We've got our trade set up, we place our risk, and we always have a 2-to-1. Okay, so we've got a 50% chance of being right, we've got a 50% chance that this is going to come down and hit our take profit, or we've got a 50% chance that it's going to come up and stop us out. Okay, and let's say that every time this happens, right, we lose £100, or if we're right, we'll gain 200. So if someone offered you £200 every time it landed on head, however, if every time it landed on tails, you had to give them £100, I don't know about you, but you're going to want to flip that coin all day, every day, because you know you've got a 50% chance of being right. And when you win more when you're right than you lose when you're wrong. So obviously, armed with that information, you're going to be confident. You're going to be going into each individual coin flip or each individual trade with no emotion and, you know, not a care in the world, because you know that long term, even if you was to lose 10 coin flips in a row, you know that the chances are out of 100, 200, 300 coin flips, it's probably going to even out. So the longer that you do it, it's probably going to even out to a 50-50% chance of you being right. And obviously you know that when you win more when you're right than you lose when you're wrong. You're thinking in terms of probabilities now, right? So you're thinking further into the future. So even if you lose 10 trades or 10 coin flips in a row, you're not going to be bothered, right? And I think this is where a lot of people go wrong when they start trading. They can, whether or not they even do their back testing, that's the first mistake. So even if people don't do their back testing and they pick a strategy that someone else trades profitably and they start trading it and they trade it for a month and it doesn't perform well in a month, and they think, you know what, this is crap, it doesn't even work, I'm down, you know, this strategy is useless, I'm going to move on to the next one, right? And they're always chasing the next best system. They see that Big Daddy over there has got a system that's winning, some like on his signal services, everyone's putting profit shots up, and they think, right, I'm going to go and join that signal service. So they go and join that signal service, and then guess what? Pip Daddy goes into a little bit of a drawdown. So they see Big Pippin, and he's winning now. So they'll go and they'll try his system for a bit, and they'll be jumping around trying to find the next best system without just giving their system time and, you know, trying to benefit from the long-term mean expectancy of their system. And let me just, if I pull up some data now that I collated from some back testing, and this is just a snapshot off of 3 pairs. Okay, so 3 pairs in the space of 1 year. And I just want to show you the results between all 3 of the different pairs, and then I want to show you the results collated, right? And why it's so important to give yourself a chance and give your system the chance it needs to benefit from the mean long-term growth. Right, okay, so I've got 4 screenshots here, right? And these are screenshots that I've taken from back-tested data that I've collated. For about 6 months of the year, this system is at break even, right? In fact, for 3 months of the year, it's losing. Now, most people, say like this was a signal service, most people would have given up by now, right? And had they just waited till the end of the year, they would have been in profit. All right, so that's just one pair, okay? So let's look at the second pair. This is about 5 months of the year. People, like if this was sort of anyone else, they probably would have been, if it was a signal service, they probably would have been like, oh, this is crap, I'll put however much in and I've not really made any money, you know, I'm not very happy with this. Or even if, say, like they missed this big run, right, this big win here, this winning streak, and they got in here, okay, and they've traded it to the end of the year, and they probably would have been down from when they had, like, from if they'd started here, they probably would have been down, and they probably again would have been like, this is useless, this doesn't work. Or the same as if someone was trading, they hadn't tested, or they'd tested but they hadn't got this data and hadn't looked into this data, right? They'd probably be like, oh, I'm doing something wrong, what am I doing wrong? They'd stop trading. And, you know, like if you look here, right, the sort of the main area that makes this year profitable is this month. So it just had one really good month and it sort of boosted it right up. And I actually did take this out to see whether it would be profitable over the year anyway, and it is, but only just, right? It was about 10% if you take this out. So it's still going to beat the banks. And again, the last pair, right? Let's say, again, someone deposits money here and they're going into a signal service, or they're starting to trade and they haven't done the testing again, and they trade for the first month and they're no better off than when they started, right? Trading isn't like a salary. Every month you're not going to get a paycheck every month, right? Sometimes you'll win a lot, sometimes you'll lose, sometimes you'll be break even. That is trading, okay? You've got to think in terms of probabilities and think long term. So long as you execute your trade to your plan, how you're supposed to be trading it, you don't make any mistakes, which, we're all human, we all make mistakes every now and then, but so long as you're going back over your trades and you're trading your plan how you're supposed to, and you haven't hit your maximum allowable drawdown, which we'll get into later on, but that comes from your back-tested results, right? As long as you haven't hit your maximum allowable drawdown and you've been trading your plan to a T, right? You need to just give it time, okay? And the consistency just comes with time and having these numbers, and not, just knowing that over the long run, if you keep on taking the trades that you're supposed to, keep trading the way that you're supposed to, you'll come out on top. Right, and I just want to show you one more screenshot, and this is of them all collated together, right? So when you put them all together, obviously, because even if you just traded this on its own, it's still not it looks like it'd be better just trading this one on its own than trading these two, right, with it. But it's not, because you increase your frequency, right? Your trading is 4-dimensional. A lot of people just think of their trading as 2-dimensional, so win rate and risk reward. But there's two more important factors that people miss out, and I'm going to talk a lot more in detail about this in the next video, right? Because it doesn't get spoke about enough, and it's really important. So again, right, the account balance, when this all put together, and you can see that over the year it comes out really profitable. However, if you was just looking at the first 3 months, right, it looks terrible. It looks like the world's worst system, right? It doesn't look like the world's worst system. You haven't really lost money. Maybe a little bit. You sort of negative here for the first month, and then you break even, and then you're going negative into about the first 3 months, and then you're just in a bit of profit, and then you're negative, right? Most people would have given up by now. They'd have been like, what am I doing wrong? I should be in profit now, I should be winning. And guess what they'll do? They'll quit right before they have their big winner. And had they just stayed consistent and stayed the course and thought in terms of probabilities and just kept flipping that coin, right, they would have come out on top. Right, so how most people think of their trading, they only think in terms of win percentage and risk reward, right? That's literally the only two things that people think about when they're thinking about trading. But really, your trading isn't like this, right? Your trading is 4-dimensional, okay? So you've got your risk, you've got your win percentage, right? Your win rate, how often you win and lose. You've then got your risk reward, and don't get me wrong, I'm not saying they're not important, they are definitely both important, right? Your risk reward. However, two things that people really don't talk about, which do make a massive difference to your trading, is the frequency of trades, right, which adds a third dimension to your trading, and the frequency in which you take trades is very important to the long-term profitability of your system. And as well, another thing is the fact you're human, right? And it's a bit hard to draw a fourth dimensional shape, so I'm just going to put this up here. But in this section here, this fourth dimension, right, you've got to allow for the fact that, you know, you're going to make mistakes. You're only human. You're going to place orders wrong, right? You've got to allow for that. The fact that you know, life gets in the way. So maybe sometimes, you know, things pop up that you don't plan for in your back testing, and, you know, you can't beat yourself up and think that, you know, you've just got to accept that you are human. You've got other stuff going on. You know, sometimes you're not. You've got to try and be as consistent as possible. Don't get me wrong, but, you know, that is going to be a factor. And probably one of the most important elements of all is your psychology, right? The fact that you've got to see this out. You know, even if you do lose 10 trades in a row, as long as you haven't hit your maximum allowable drawdown and it's within your usual parameters, that your system, it's a natural drawdown for your system, and you'll know that through your backtesting results, right? That you've just got to stick with it and stay consistent. And that consistency really comes from just crunching the numbers, knowing this type of information, knowing the long-term expectancy of your system, and not just picking a system out off of whoever, right, and just trading it willy-nilly, because you know, you're setting yourself up for failure. So it's exactly the same with signal services as well, right? If you don't know the long-term expectancy of the trades that you're in and the system and how it's supposed to perform, then the chances that you're going to have long-term success with that are very minimal. So if you're interested in understanding a little bit more about how the frequency of trades coupled with, you know, your win percentage and your risk reward and, you know, the fourth dimension, how it all really affects trading and how different sort of parameters can really sort of ramp up or, you know, damage the profitability of a trading system, then make sure you stick around for the next video where I'll be going through that in some more detail, and hopefully it's a little bit of an eye-opener for a lot of people. So obviously, based on this picture and the information from the video, you know, you really shouldn't be bothering yourself about a certain amount of pips per day, certain amount of pips per month, certain amount of pips or percentage per day or month, right? Because trading just isn't like that, right? The markets will do whatever they're going to do, and your job is to put yourself in the best position possible from your tested plan, your tested data, to react off of, you know, what the market presents. Having a percentage gain per day or per month, you know, the markets don't perform the same in the summer as they do in the winter, right? So you're going to have different results depending on the type of system you're trading, the time of year, and, you know, whatever's going on in the world, right? So don't just stay consistent, stay the course, and think in terms of probabilities. Alright, so I hope you found value in that. I really can't stress enough the importance of thinking in terms of probabilities in trading, and, you know, like having that data so you know the long-term expectancy of your results, and then you're not getting caught up on each individual trade, each individual week, even each individual month, right? And you're looking at your data with a bird's eye view from a bigger picture, and as long as you're executing your plan, how you're supposed to be trading and how you're supposed to be executing your trades, and you're not making silly mistakes and entering trades that you shouldn't be entering, that you just need to stay the course and don't jeopardize your plan if you've tested it and you've got a winning strategy, right? So you owe it to yourself if you've done the work to, you know, to stick to your plan and think in terms of probability. So I hope you enjoyed this. If you did, drop us a like. And if you haven't already, make sure you hit the subscribe button and you turn on the notification bell so that you're notified anytime either this playlist or any other playlist is updated. So I hope you have a good trading week, and I'll see you on the next one.